Hi, hello everyone. Today we will see how we can calculate the schedule K-1 of S corporation, and here is the exhibit. So we can see that the income statement is already given to us, and there's the sales, taxable interest, income, total revenue, expenses, everything is given to us. And Brian Get Rate is a single taxpayer and who actually wants to itemize the deduction. And also Brian is a 50% interest owner in Technology Plus, and it is a S corporation. See, so he is not the 100% owner of this corporation, and therefore he was also paid a salary and received distribution, both of which were based on his ownership percentage. So first of all, we need to calculate the ordinary business income. So here from the exhibit we can see that his total sales amount is 225,000, and if we just hit on the calculator, so his sales is 225,000, and these two are not his regular business income, so we can exclude this taxable interest income and long-term capital gain also. And here the expenses are given. Shareholder salaries can be expensed from the sales revenue. So what we can find, 225,000 minus 150,000 minus cost of goods sold 50,000, operating expense 12,000, and charitable contribution and section 179 deduction is a separately stated item in schedule K1, so it will not be included for the calculation of ordinary income. So MACRS makers depreciation is 3,000. So if we hit on 3,000, it's 10,000. Now Brian is a 50% owner interest in Technology Plus. So if we hit on 50% of 10,000, it is 5,000. So if we hit on 5,000, this is ordinary business income. Now if we want to calculate the net rental income, so there is no rental income in the exhibit, so it will be obviously 0. Interest income is 5,000, but Brian is only 50% owner, so 50% of 5,000 is 2,500 is interest income. And ordinary dividend, is there any dividend given to Brian? No. In that case we can hit 0. Long-term capital gain, there is a long-term capital gain given 40,000, and if we click on 40,000 multiplied 50%, I'm just showing you how it is calculated, it's 20,000. Regular MACRS depreciation, it is it is already been included. It is already been included in the ordinary business income calculation, so it is not a separately stated item, so it will hit on 0. Section 179 deduction is $6,000, so 6,000 multiplied by 50%, it is 3,000. Okay. Charitable contribution 1,000 is half of 1,000 is 500. And distribution is not taxable, but it always show in the shareholders schedule K1. Based on that, we can basically calculate what is the ending basis of the shareholder, so that in the next year when if there is any loss or anything, and we can calculate that how much loss he can deduct in his ordinary against his ordinary income. So 50% of 20,000 is 10,000, so it is 10,000. But yes, and all done. So if I click on hit submit, what we'll get? Let's check. Oh, all is correct. So this item will actually reflect in Brian's schedule K1 for his S corporation, and it will ultimately reflect in his personal income tax return, and that is the amount that he needs to reflect in his personal income tax return to calculate what amount he actually owes to IRS. Thank you for watching my videos. Okay, bye for today.